You're with us here in a fresh new edition of Trading Hour. The market is as flat as they come. The Sensex is down 13. The Nifty is almost unchanged, 2-point change. But the good news is that the breadth of the market is actually quite okay. 1,130 stocks in terms of actively traded stocks are higher as compared to about 500 stocks which are down and out. And I think this week, if you look back and you take account, what will stand out is the fact that there is some life which you can see stirring in the mid-cap and small-cap part of the market. There is certainly evidence of that. It needs to continue. We need many more days of what we have seen this week to conclusively say that interest is back in that part of the market. But this is good to see, the fact that it's not just a bunch of Nifty stocks which have been doing well while the rest of the market sulks, but there is genuine interest, as you can see, in many parts of the broader market. And of course, I mean, just look at the return, the change in the Nifty as compared to the mid-cap and small-cap indices the last couple of days. And you do get a sense that people are looking at that segment a little bit more closely. But as I said, it's maybe just a beginning, maybe a false start, who knows. But we need many more days of exactly that. Ekta, morning.
Hi Prashant, yes, absolutely. If you just look at the markets on a week-to-date basis, there's a clear outperformance which is coming for the mid-cap index. So on a week-to-date basis, the Nifty is up around 0.5% at current reckoning, and compare this to the mid-cap index which is up around 2%. But now definitely there is some amount of a come-off which has taken place for the mid-cap index as well as for the bank Nifty, which is in fact down lower by around 0.5%, courtesy stocks such as Kotak Mahindra Bank, which is obviously selling off post that big block which happened earlier in the morning, and separately other stocks in focus which are pressured from the entire bank Nifty space is HDFC Bank, which is down around 0.5%, Axis, which is down around 0.3%. Overall, however, there are other stocks which stand out. So we have Jet, which is flying around within the broader markets, and we have stocks such as from the oil marketing space, IOC, HPCL, BPCL, all of them showing some amount of traction on the upside. But let's get in some opinion then. No, in fact, let's get in some stocks in focus. We have Kotak Mahindra Bank, which is in fact the top index loser. We understand that ING has in fact sold its stake in the bank. Nimesh is joining in with all of those details. Nimesh, over to you.
It's a clean out trade, which means that ING has sold its entire 3% stake in block deal today. Remember, when the book was launched last evening, there was a base book of 1.2% and they were willing to sell the remaining part as well. What I understand, there was a very strong demand, which is why they've sold the entire 3% stake via block deal today. And the sense I'm getting is that the large part of the deal was bought by the FI institutional investors. So it's a good mix of both FIs and DIs which have participated in today's block. But the most important part is that we have a confirmation now that ING has sold out its entire 3% stake, and so it's a clean out trade as far as ING is concerned. So no further stake sale likely, and the fact that there was a very strong demand. I guess the stock is a little soft today because of the leakage. There was some bit of leakage as well in the system in that 5.6 crore shares. So not all the institutions have got what they're demanded for. So maybe that's why the stock is a bit soft. But the most important part is that it's a clean out trade from ING. They've sold their entire 3% stake and they've exited completely from Kotak Mahindra Bank after today's block deal.
Okay, so the Kotak Bank stock is still down. It's down about 4%. 1239 odd is where it's standing. I mean, Nimesh giving us a picture of what may have happened and who may have bought some of that stock which was sold. Jet is the other stock in focus today. We understand from reports that key lenders, State Bank of India, PNB, have agreed to provide 500 crores in emergency funding to Jet. Sonia is here with those details. Sonia.
Well, some relief coming in for Jet Airways. Reports indicating that the two key lenders, SBI and PNB, have agreed to give 500 crores of emergency funding to let Jet operate at least until a restructuring plan has been completely finalized. Now, the report does indicate that the emergency funding is subject to other lenders in the consortium not objecting to this plan, and this funding will allow the airline to operate at least until the restructuring plan is finalized. CNBC TV18 though has not independently verified this. Remember, SBI is one of the largest lenders to Jet, has an exposure of over 2,000 crores. Apart from that, some reports also indicate that a majority of shareholders at the EGM have approved the bailout plan. The bailout plan, remember, will see a conversion of the airline's debt into equity in favor of lenders. But all is not well. There are also other reports which indicate that the lessors of Jet Airways may hold back disbursing of new planes and take back some of the old planes as well, because they are not convinced of the restructuring plan coming through in its entirety. So yes, there are some concerns as well, but for now this 500 crores of emergency funding is something that's an immediate positive for the stock.
Yes, absolutely. So for Jet, it's up around 1% at this point in time, maybe a little subdued simply because of the higher Brent crude prices that we've been dealing with, currently at around $66, $67 per barrel. But we do have Mitesh Thakkar joining in to discuss the technicals of the market now. Mitesh, hi, morning, over to you. What is your recommendation both for the Nifty as well as in terms of specific stocks?
Yeah, so I think on the index, after 2 days of rally, we are seeing some kind of a pause around the 10,800 mark. But I think given the fact that the intraday chart still remains positive, 10,750, 760 should be your immediate support. In fact, the day's low is around in that range as well. I think if that is not being broken, there's a good chance that we'll go and hit the 200-day average, which is at 10,860. Possibly, if not today evening, then most likely by Monday or early Tuesday morning. So in that sense, maintain a positive bias. Try to buy the Nifty around 10,760, 770 zone and keep a stop at 10,740. On stock side, I have one buy and one sell. HCL Tech is a buy with a stop at 1,054. Look for targets of 1,095. While ITC is just breaking below that 273 half, 274 level. So that's a sell. Keep a stop at 277 and look for targets of 265.
Okay, fair enough. We've got a question coming in from viewers, Mitesh. So this is Nandrajan, who has 500 shares of Glenmark. His cost is 604. Glenmark is at about 593 right now, so not very far. And the viewer wants to know whether they should hold or sell now. What would you say, Glenmark, Mitesh?
Yeah, I think I would suggest an exit for two reasons. One, the long-term charts are not showing signs of an immediate up move happening over here. In fact, the stock was doing well till 2 months back and then has gone into a medium to downtrend, and he's not very far away from his cost. So I think in that sense, it would be good to exit at current levels and possibly shift into something which is showing signs of an uptrend on the longer term charts.
Mitesh, have you looked at the mid cap and small cap index charts themselves? Are we seeing some any turns there? What are you seeing?
So I think it's a very classical setup, Prashant. The index was, the Nifty mid-cap 50 was oversold, and from oversold levels we got a bias on the hourly and the 2 hourly chart. Typically this could lead to a short covering. They're not in FNO, but I think this could lead to some kind of buying for the next about 5 to 8 days. We have had, today is the 4th day of the up move. I think I'm looking at the Nifty mid-cap 50 hitting 4600 first and possibly 4730 on the upside. So we are at about 4530. So which means that the index could see about 4-5% kind of more upside in the next 5 sessions. So I think I would still trade with positive bias there and look at ideas which are breaking out on the mid-cap charts.
Okay, well, Mitesh, I just wanted your thoughts on what's taking place with the metal stocks. Vedanta, for example, is up around 13% this week. So strong gains coming in there. Tata Steel has also not done too badly. It's up around 7 to 8% week to date. Your thoughts on whether you would see any further upside?
I think mild more upside. See, again, the setup was very similar. Oversold index coming out from reversal from the lower levels. I think Vedanta around these levels I would not be very inclined to buy. I think it has already hit the resistance levels, but we've had buys on Jindal Steel and Power and JSW Steel as well as Tata Steel and SAIL. I think the ferrous pack still offers me some more hope and some more upsides. So for Jindal Steel, I have been looking at targets close to about 160. We might hit them possibly in a day or two. SAIL, I think 51.5 is the first target, though good chance we might see 54 also over there, which is roughly about 8, 9, 10% kind of an upside. And Tata Steel, I would look at possibly levels of around 514 to begin with, and if that is being crossed, even 530 can happen.
Okay, Mitesh, thank you very much for that. We will come back a little later and get you more trades. Mitesh Thakkar there with his trading ideas. Let's listen into what Gautam Chachoria has to say on the market going forward. This is Gautam from UBS Securities. Listen.
The markets are clearly anchored around the second scenario, which is BJP-led coalition. The only difference being 6 months back, the market's expectations were a stronger coalition. Now the anchoring is more around a weaker coalition, maybe around BJP at 200 odd seats, and then a weak coalition right now versus 220, 230 earlier. for BJP. That's where the markets are anchored around. But in investor discussions, the probability of Mr. Modi not coming back through a coalition was near zero 6 months, 1 year back. Now there is some probability being assigned. Still a low probability, but still some probability being assigned. If you look at the market multiples for at a broad Nifty level, that doesn't tell you that the markets are pricing in for a negative election outcome. So the starting point of the markets does make us worried, and our risk reward framework still suggests absolute downside for markets from here. Obviously, if you have a more extreme negative scenario, then the markets can derate further and stay there for a while. Our base case for the Nifty is 10,000, so that's about 6-7% downside from here. That's a base case. The upside scenario is 11,300, 11,400, and the downside will be below 10,000 levels.